Hi everyone, let's go over my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin, starting with my low time frame bullish scenario where we are looking for a wave 1, 2 and then a bigger 3 towards the upside, where a minimum target is going to be the 31k high. In this particular scenario, there's a couple of reasons why it feels as an alternative scenario. First of all, this wave 1 over here looks much better as a 3-wave structure than a 5-wave structure to the upside. It is possible to count 5 waves in this wave 1, but it does not look nice at all. Secondly, we have a 1, 2, 1, 2 diagonal. So we have a 1, 2, then another 1, 2, and then expecting a bigger 3 towards the upside. But as you can see, the trend lines at the top and the bottom are diverging. And what you prefer to see is that the trend lines are converging in a structure similar to this, where eventually the trend lines are converging, which is by far most common in a 1, 2, 1, 2 setup. Then if we look at the volume, this push to the upside, which then should be the first wave of a bigger wave 3, should already have at least an increased volume. But if we look at the volume over here, you can see that the volume that we have over here is very similar to the volume that we had in the corrective structure of this wave 2, which is not what you want to see, because in this move to the upside you want to see the average volume moving up while price is moving up as well, and so far the volume has been quite disappointing, so that's not really what you want to see. If we then get a move to the upside, you want to see the average amount of volume increase as well. Then this wave 2 bounced on the 886, and the 886 is a rare target for a wave 2, but a common target for a wave B or a wave X, therefore increasing the probabilities for this move to the downside being a B or X wave compared to a wave 2. And finally, we have a fib time over here that you can see, which is taken from the low to the high of wave 1, and then you double click over here at the high of wave 1 to compare the time it took to develop wave 1 compared to then the length of time in wave 2. And you can see that this wave 2 is at least 3 times larger in time compared to wave 1. Now, yes, of course, like corrective structures can be longer in time, like compared to their impulsive structure, but for a wave 2, a 3 fib time is extremely rare as well. So those are the reasons why for me this scenario still feels like an alternative scenario. That doesn't mean, however, that we can still find upside, as I will show you on the micro scenario. If we then go to the bearish scenario, we are looking at this to be a 3-wave structure in a WXY, with then the 886 being a target for X or B, which is common, and then this move to the upside being part of either a wave C or a wave Y. That doesn't really matter, as the target area for a C or Y is the same between the 1 and the 1.236, taken from the low to the highs over here to then the low of wave X or wave B. Price had a little bit of a wick above. That is no problem. It took the liquidity of the highs over here. These were highs made during the news in that week, and we had some strong divergences going on. So there definitely was some absorption over here, which means bigger positions were basically absorbing market longs. And you can imagine that if bigger positions are absorbing price over here, there must be some liquidity resting above these highs for then a grab of liquidity and a move towards the downside, where in this particular scenario, we expect this to be the end of a structure on the medium time frame, which I will quickly show you in a second. Now I talk about it, and we eventually expect a move to the downside, where if I then quickly show you the bearish scenario over here, then this is the end of a wave X, and eventually you expect a wave Y to the downside. But in my previous video, I go in depth in which different scenarios, a zigzag, a flat, or a triangle, might be likely for then that wave Y to the downside. If we then go to the micro scenario over here, then we have this move to the downside from the highs. And as it stands now, a WXY for me is quite invalidated. A WXY is a 3, 3, and then another 3-wave move to the downside. But this move over here feels very impulsive and 5-wave-ish, let's say, and not like a 3-wave structure. You could potentially think, well, this might be a first wave, second wave, third wave. However, if this then is the third wave, it is too long for then a potential zigzag in an A, then a B, and then eventually a C. So this move is too long, invalidating a zigzag structure, and that's why I have an ABC or a 1, 2, 3, 4, 5. Now, if this is an ABC, things are going to be very, very interesting, because over here, if you take a trend-based fib extension from the high to the low of A to then the high of B, which I identified over here, with then the first corrective structure being this, a second one is an expanding flat, and then the final corrective structure over here, then eventually looking for an impulsive structure to the downside. So again, trend-based from here to the low of A to the high of B. The most common target for wave C is between the 1 and the 1.236, which is between well, basically 27k and 26.7k. And what is interesting is that it is right on top of the current monthly point of control at 26.875, and it also hit the target box that we had between 26.875 and 26.6k for a nice area of support. So this is actually some nice confluence for then a potential ABC. If this is, however, a wave 1, 2, and then a bigger 3 to the downside, well, first of all, you want to see volume increasing, which has happened. As you can see, volume has increased, but you want to see the 1.618 being hit as a minimum target for wave 3. And this is where at the moment I'm like, well, I might be edging more towards the ABC scenario than the 1, 2, 3 scenario. And the reason is that if we look at this structure over here, this one over here, then you could say, okay, if this is a wave A and then a wave B, then you could count in this C to the downside a potential wave 1, 2, 3, 4, 5, which might then already end another impulsive move, and then an A, B, and then this C might already be ended by now. So yeah, a way like this looks good in this scenario. Of course, if we're looking for a wave 3, you want to see the 1.618 being hit, as that is usually a minimum target for wave 3, but a rare target for a wave C. So that is how we can determine if it's a C or a 3. But at the moment, if price wants to go over here, it first needs to pass the support area, and as it stands now, we are finding a bit of support. And what I think is going to be a big mindfuck for many people as well is that if this is potentially a 3-wave move in an ABC, I can already see people talking about, yo, this is a wave 1, this is a 2, and then if we're going to take this high, we're going to have an impulsive structure to the upside in a big wave 3. And this is where like it's going to be interesting with trading mindset, in my opinion. So if this is potentially a wave 3, if we get a 3-wave structure to the upside, then a potential ABC expanding flat might be possible, where the common target for wave B in an expanding flat taken from the high to then the low of this potential blue wave A is going to be between the 1.236 and the 1.38, which is between 28.8k and 29.1k, right inside this target box that has an area between 28.9k and 29.2k. So this can be very, very interesting. It's very hypothetical as well. Of course, there's no signs yet that we even get this move towards the upside, but it is just a scenario where I think that if we are going to break this high, many people might be thinking about a very bullish scenario, but instead this might be a 3, 3, and then a 5-wave move. Now, if we do get a move towards the upside, and it is going to be very impulsive, so it's going to be a 5-wave move to the upside, where already in like a 1, 2, 3, 4, 5 waves you reach this area, then it might be more likely where we might see continuation, because you want to see a clear 3-wave structure before hitting this area over here, right? So that is a scenario that I am looking for, and usually an expanding flat is very difficult for people because it can bait so many people over here for potentially longing, thinking more upside, and there you get a strong impulse to the downside. Something that might potentially support this move over here for then an A, B expanding flat and then a wave C to the downside is the CVD. So if we actually go to the 1 hour, then we do already have some bullish divergences on the CVD, which I will show you in a second. So we over here, we have a low, higher low at the moment on price, lower low on CVD, which I will show you now then. So over here, as you can see, higher low on price, but on the yellow line, you can actually see it live over here. We have a lower low. The horizontal yellow line is where the price or the CVD line is at the moment. And you can clearly see that it is below the low over here. So higher low on price, lower low on CVD. That is a bullish divergence on this, well, 1 hour time frame. Preferably, one would like to see maybe some local CVDs as well, that if you get a bit of a bounce, move to the upside, then a retracement, maybe some bullish divergences over here would give even more confidence for then a potential move to the upside, where the target of this divergence over here is 28.5k. So this could play in the hand of then a potential expanding flat scenario, but of course, again, it is quite hypothetical. So let's first wait and see what price is going to do over here, because we might potentially get a potential long setup over here, depending of course on what price does, because in this scenario scenario, if we are then looking for a potential ABC, then a potential long can be entering over here, short somewhere safely below, looking for a move towards the upside, where then again an interesting target is that target box. However, as always, you need to look for proof of support. You need a strategy or a plan that has a couple of entry requirements, and you need to tick all your boxes before entering a potential trade. You need to know where to put your stop loss, take profit, and all that stuff. So maybe for you it's going to be a market structure change, for them potentially an entry, maybe locally some bullish divergences on the CVD or RSI or stochastic or whatever it is, you know, that you are looking for, but make sure you have a plan. I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.